Hello and welcome to the stock analysis. Today we're going to be taking a stock analysis on Xpeng. Now, if you don't know what Xpeng is, it is a Chinese electric car manufacturer, and I like it quite a lot, so that's why I'm going to be performing this analysis today. If you like this video, please like and subscribe, and of course remember this isn't financial advice, this is purely education and entertainment purposes. Now, let's take a look at the stock here. As you can see, has performing quite nice ever since August of 24, and even before that, as you can see, it was trading quite sideways, but ever since then, it is quite nice. It was trading all the way up in 27. Earlier this year, it's actually just a little over a month ago where it has had this peak. Now, I like Xpeng quite a lot. It is by far my favorite Chinese car manufacturer besides BYD, but BYD at this point is just way too expensive. And I live in Scandinavia where Xpeng is gaining a huge market advantage at the moment. They are selling a ton of cars both in Denmark, Norway, Sweden, Finland, and also in the more richer parts of Germany. Xpeng is gaining quite nice gains. So that's why I like the stock at the moment. Now, as you can see, it has been a bit more volatile. As you can see, we did also see it all the way up in 24, back in 23, and then we did see these poor earnings here. As you can see, down by 37%, down by 40%, and down by 31%. Until we did see a bit more realistic earnings here, where they then beat them. So maybe they're not realistic, but then they beat them. So as you can see, it is quite volatile. Now, of course, you need to remember, given the current trade war between the United States and China, maybe it's gonna be worse to own stocks like this, but I just personally think that the Chinese electric car manufacturers are just way too good. I personally have driven in Xpengs and they are very nice. The driving comfort in this is basically the same as a Porsche, to be honest. So very nice car, and they are very fucking cheap. So get in while you can. Now, as you can see, it is a nicely huge company. We have next earnings report in about a month. It's going to be interesting to see where that lands. And as I will run over the earnings, as you can see here, it is performing quite nicely. It's a bit below the next earnings, but let's see how that performs. They don't pay out any dividends at all at the moment, and here is why. They don't make any money, to be honest. But then again, many companies which are quite new, like Xpeng, they don't make any real money. But as you can see here, they are not losing as much money as they did before. As you can see here, their revenue increases, and then from 23 to 24, their net income is reduced by almost half of how much money they lost. So of course it is, if we see that again, maybe we might see a positive for 25 or 26. I think at least by 26 they are going to be making money consistently. And as you can see in the seasonals, it was launched in 2020 and we have quite volatile, as you can see, down by 80% in 22, down by 15% last year, and then 21 it was up by 14, up by 43% in 2023, up by 73% this year, so it's performing crazy. We did see it up by 240% in 2020. It ended up being up by 100%. So as you can see here, it is quite a volatile stock. You can also see in 23 we were up at some point up by 129%, but ended up at 43%. Same as this year, we were up by 128%. That is, of course, this spike right here. So it is a volatile stock, so you need to have an ice on your stomach if you want to buy this. You can also just see that down here in the RSI. We have some pitfalls here, but we also have quite a lot of spikes. Now, if you don't know what RSI is, that is the relative strength index, and this means if a stock is overbought or oversold. So if it's trading up here above the 70, it is overbought. If it's down here below 30, it is oversold. So that is why they are quite sharp edges, both up and down, which means that if it's down here, it might be a good time to pick up a stock. If it's down here, up here, maybe don't buy it. Now the technicals for this are quite great. As you can see for the day, they are a buy, and for the month it is still a buy. So if you are a momentum trader, right now is not a bad time to get in. The one problem I have with this is we see quite a lot of gaps in the stock. As you can see here, we have a lot of gaps between the candlesticks, which means the technicals can be not as great, because then they might miss a signal, because technicals only work great when the candlesticks are basically touching each other. And we did see we might see a double bottom here, and then it's gonna increase up. I don't know, but of course it is a volatile stock, so you need to have that squared away before you buy a stock. Now the analyst rating on this are quite amazing, to be honest. We have 41 analyst rating, which is quite insane that we have this many on such a small company. As you can see, it's only 14 billion US dollars, and to have 41 analysts is quite insane. But everybody agrees with my opinion, which is it is a strong buy. As you can see, it is a strong buy. 28 strong buy, 2 buy, 8 hold, 1 sell, and 2 strong sell. So if we remove these 3, we have 48 or 38, and basically every 30 of those are in buy or strong buy. So if you want a company that is going to increase quite nicely, I think this might be one of those which are going to end up just 100,000 or 200,000 your money. No, 1,000, 100 times in your money, of course. And as you can see, as I said, I expect them to make money soon in 2026, and so are the forecasted estimates. So I think if you are a bit of a gambler and you want to make some great money, I think Xpeng would be a nice stock to get into. I don't think it's going to be the company that's going to make you maybe rich this year just because of the tariffs, but I think maybe in 28 when they're making proper money, I think maybe if you get it now at $20, I could imagine that they actually get quite better. I think in 28 they might be trading at 100, so you might even 5x your money in 3 years. I don't think that's unrealistic. It might be to the higher side, but I don't think it's unrealistic at all. Now, if they like this video, please don't forget to like and subscribe.